and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Cues looking pretty mixed when it comes to the global markets. Asian markets are in fine fettle, given the fact that US and China have agreed to pause tariff hikes. In fact, the deadline has been extended by 90 days by Trump, and that is being cheered by Asian markets. Wall Street pretty much ignored that news, given the fact that we are looking out for key inflation data, CPI data in the US today. So ahead of that, some bit of caution. So the Wall Street rally has stalled, but the Nikkei hit a fresh high in today's session, and of course sentiment being lifted by the deadline extension on China tariffs. GIFT Nifty, not much coming out of the GIFT Nifty in terms of cues, extremely flat, but was hinting at a positive start. But for us, the crucial thing will be to watch out for whether or not yesterday's rally extends into today as well, because FII shorts had built up in the system. We saw some bit of short covering yesterday, but if that extends, perhaps we could see higher levels on the index. But 24,500 back on the charts. In fact, we did clock in the 24,600 mark in intraday trade yesterday. Whether or not we see another leg up today, that will be the crucial thing to watch out for. Lots to watch out for, lots of earnings today as well. In the last leg of the earnings season, we'll take stock of some of them, and we'll also take stock of all your stock related queries. So keep them coming in on a live feed. We'll get them addressed by our experts on the show. Quickly take a look at the top headlines before we move any further. US and China agree to pause tariff hikes for an additional 90 days. President Trump signs executive order just hours before the deadline was set to expire. Trump confirms meeting with Russian President Putin on Friday, says he will try to get some territory back for Ukraine, and also expects increased trade with Russia following a peace deal. Wall Street rally takes a pause ahead of CPI inflation data, but Asian markets trade with gains, with the Nikkei hitting a fresh record high. US-China trade truce extension lifts sentiment. The GIFT Nifty extremely flat, hoping for a positive start for our markets today. Oil prices rise as the US and China extend a pause on higher tariffs, easing concerns of an escalating trade war. Gold prices, however, slip after President Donald Trump says tariffs will not be placed on imported gold bars. And all eyes will be on India's CPI data due at 4 p.m. today. Economists expect inflation print to fall below the 2% mark and come in at a multi-year low around the 1.5% mark. Recapping yesterday's market action, then we started the week on a very healthy note. Remember, we were coming off a 6th straight weekly loss for the market, so the mood was pretty somber, but saw a good short covering rally yesterday, which did push the Nifty above that 24,550 mark, and all of the sectors were participating yesterday, and the gains were led by the likes of PSU banks and defense stocks. Even realty and autos were among the top gainers. The market did close near the day's high. Breadth was in favor of advances. The advance decline ratio was almost even Stevens at 1:1. The mid caps saw broad-based gains, and of course, the likes of HDFC Bank, SBI and L&T were among the top contributors to Nifty's up move. Defense stocks managed to snap out of a 3-day losing streak. Some of the top movers were the likes of Tata Motors, although numbers were disappointing, but the outlook was fairly strong. And Street has also kept its faith. Some of the brokerages maintaining their outperform rating on the stock, which is why the stock was among the top Nifty gainers, gained somewhere around 3% or thereabouts. AC stocks, continue to reel post guidance cut, weak numbers. So you had the likes of Voltas, PG Electroplast, one stock one needs to mention. All of these stocks saw extreme pressure in yesterday's session. Foreign investors did turn net buyers on Friday, but once again, selling coming in there as well. 1,200 crore rupee worth of stocks sold in the cash market, but DI buying continues. Almost 6,000 crore worth of stocks bought in the cash market. In terms of the put call ratio, it jumped back to 1.03 vis-a-vis 0.66 in the previous session. And taking stock of some of the stocks that have been in the FNO band today, PG Electroplast. Now this stock has shaved off over 35% in the last 4 sessions. Last 2 sessions we saw extreme selling pressure. The stock has come off almost 50% from its 52-week high as well. Still in ban would be the likes of PNB Housing and RBL Bank. No stocks have exited the F&O ban list. So all in all, 3 stocks in F&O ban today. But lots of earnings to watch out for. ONGC, Hindalco, Hindustan Aeronautics, Cochin Shipyard, Bharat Dynamics, Hunasa, Nazara Tech, Nykaa, Suzlon. So yes, last leg of the earnings season and a busy one at that, a busy day, so to say. Nazara Tech, meanwhile, will also be considering bonus issue and a stock split as well. But let's understand how things are shaping up or looking like for the market today. Whether we will be able to cross that 24,600, 650 mark on a decisive basis or not. Let's speak to Ruchit Jain, Vice President Technical Research at Motilal Oswal Financial Services. Ruchit, lovely having you on the show. Yesterday, good rally coming in. Do you see more legs to it? What are the charts suggesting? And the Nifty Bank also saw a good rebound, and we did, come above that 55,400 mark on the Nifty Bank index as well. So, how's the setup looking like for today?
Yes, hi, very good morning, Nandita. Well, in last 1 month, we have already seen a good price-wise correction in the market from the recent swing highs. And if you look at the broader time frame charts of a bit mid to long-term perspective, then this is not a downtrend, but just a corrective phase within an uptrend. So generally, such corrections are good buying opportunity. Those who are looking for do any kind of delivery-based buying. But yes, from a very short-term perspective, since this is a corrective phase within an uptrend, I think the near-term market would tend to show some sort of consolidation going ahead. So I think price-wise, we are almost done with. We don't expect any significant downside from current levels as far as price-wise corrections goes. 24,250, 24,350 is a good support zone to watch out for going ahead. But time-wise correction cannot be ruled out, where markets would consolidate within this range of 24,250, 300 on the lower side. And on the high side, the 20-day resistance is around 24,700, 750 kind of range. So we expect some time-wise correction or consolidation to happen in the short term. But yes, whenever you see the setups which are there, momentum readings oversold, which day before yesterday's correction, which was the RSI was quite oversold setup. Nifty put call ratio, if you see, it was around 0.66 or odd levels, which is also oversold. FI's long short ratio around 8-9%, which are very short heavy positions. Whenever we see such short heavy positions, the room to create fresh shorts reduces significantly. So I think these are the factors which clearly hints that some pullback move could be there in the next couple of trading sessions as well. And we could see levels around this 24,650, 700 kind of range going ahead. But from a broader perspective, I think short-term markets would tend to show some time-wise correction or consolidation.
Okay, good to hear the fact that it's just a down move in an uptrend, a correction in an uptrend, and of course buying on dips would be advised here. But let's talk about the Nifty Bank Index as well. We had the HDFC Bank counter, giving support to the index. In fact, it was among the top contributors. But post earnings, the HDFC Bank has kind of slowed down a bit. Stock hasn't gone anywhere as such if you look at the last 5 days, last 1 month as well. But yesterday's up move, do you see that as a renewed momentum gaining or taking shape here for HDFC Bank? And for Bank Nifty, what are you envisaging levels?
So I think if you look at the Bank Nifty index, then some pullback move was seen in yesterday's trading session in the banking space as well. And we could see this pullback getting extended towards 55,800 to 55,900 kind of range. So some up move, yes, can be expected in the banking space. HDFC Bank overall seems to be a bit range bound only, although the broader trend is positive. But the good thing is that the 50-day exponential moving average support around 1960 is still intact. So nothing much to worry about for HDFC Bank till 1960 is intact. One can keep a stop loss below that level on any existing long portions which are there. But I believe that in the near term, the relative outperformance, if one has to see in the banking space, then that shall come from PSU banking space rather than private banks. Post the SBI numbers, we have seen a good renewed buying interest coming in yesterday. A good follow-up move was there. Even other names such as Indian Bank, which are trading around its 52-week high, has shown good price volume action. So I think even if you look at the sectoral gainers yesterday, PSU Bank was the highest gainer with gains of over 2% in single trading session. So there are indications that while the Bank Nifty might see a pullback move from near term, but relative outperformance could be seen from the PSU banking space rather than private banks.
Okay, expect a relative outperformance from the Nifty PSU Bank Index. Of course, post SBI numbers, PSU Bank Index has been doing well. But just about 8 seconds to go for the markets to open, looking like a pretty muted start today. But remember, yesterday also it was a fairly muted start, but we picked up pace and we saw the market, momentum getting back after 6 straight week of losses. But yes, it is a quiet start, so to say, as of now. The Nifty is still holding on to that 24,550 mark, just about 30 odd points down. Sensex is down somewhere around 130 points or so, 80,484. That's where it's at. The mid cap index, trading mildly higher in the green zone right now. Let's see whether it manages to hold on to these opening gains or not. The Nifty Bank Index is down 0.5%. As of now, the breadth is skewed in favor of gainers. 2:1, that's the NSE advance decline ratio. We'll of course wait for it to settle down a bit. Advances 1122 on the NSE and declines are somewhere around 546 stocks or thereabouts. Let's take a look at some of the sectors then. We were talking about the PSU Bank Index doing well, especially post SBI numbers. Today let's see what the sector is, doing, because right now the Nifty Bank Index is trading in the negative, 0.5% down. The Nifty PSU Bank Index extremely flat, still trading with a positive bias. What's doing well or holding out is the Auto Pack, another 0.2% kind of gain. Yesterday it gained somewhere around 1% or thereabouts. IT is holding out, so is metals, up 0.2%. Realty has slipped into the red, trading lower by 0.5% or thereabouts. So all in all, a mixed picture when it comes to the sectoral movers. Even FMCG is fairly quiet at the current juncture. In terms of individual movers then, Hindalco is the top laggard on the index. Novelis reported numbers. Hindalco itself reports numbers today. So Novelis reported a weak set. I think that is why shares of Hindalco are under pressure. Some of these private banking names are under pressure. The likes of ICICI Bank, HDFC Bank as well has slipped into the red. Kotak Mahindra Bank also under pressure. You have Axis Bank as well not doing all that well. In terms of the other laggards, Apollo Hospital reports numbers today. Ahead of that, it's looking weak. Tata Motors back under selling pressure, 0.3% kind of a loss coming in there. Trent, SBI Life, Shriram Finance, Bharti Airtel, the likes of Infosys and Grasim are also witnessing some bit of selling pressure. What's doing well is Hero MotoCorp. That stock is up somewhere around 1% or so. So is M&M. Wipro doing well from the IT pack. Tech Mahindra is also gaining. TCS also gaining. So all of these tech names are seeing some bit of buying interest. You also have some of the pharma names like Dr. Reddy's doing well. Sun Pharma as well. Among gainers, L&T extending gains from yesterday. Remember, it bagged a big order yesterday. Was among the top contributors on the Nifty today as well, gaining 0.5% or thereabouts. IndusInd Bank is bucking the trend, wherein other private banking names are not doing well. IndusInd Bank is holding out. That stock is up somewhere around 0.5%. Infosys has also edged back into the green. Maruti Suzuki, ITC, Nestle, ONGC, Titan among the top laggards yesterday has managed to come back into the green. So all in all, quiet start, can't really call it a trend. Let's see how things proceed. Maybe wait for things to settle down. Next 1 hour or half an hour, we'll get to know which way we will be heading. But Ruchit, looking at the open, we are seeing some bit of traction in auto names. Yesterday, in fact, last few days, autos have been doing fairly well. Anything that's catching your fancy? The likes of M&M from a four-wheeler pack or Hero Moto from the two-wheeler pack. Any thoughts on these two counters?
Since last few months, but there have been certain names which have shown a good relative outperformance compared to sectors correction. You take such stocks such as M&M, which is respecting its 50 DMA support and it's quite close to its all-time high levels. Even the two-wheeler space, we have seen a good momentum recently in TVS Motors and Hero MotoCo, where again, the price volume action has been very strong over last 1 or 2 weeks. So I think sector as a whole may not see a trended up move, but certain stocks which are showing relative outperformance, such as Mahindra and Mahindra is there, TVS Motor is there, Hero Motoco is there. I think no, these stocks would no buck the sectoral trend.
Okay, that's about the auto pack. But let's talk about Hindalco. That stock is among the top Nifty laggards today. Its US arm Novelis came out with numbers not that great. Net income was down somewhere around 36% on a year-on-year basis. Net sales were up somewhere around 13%. The net income excluding special items was down 43%, and the adjusted EBITDA was also down 17% on a year-on-year basis. The decline in profitability was primarily due to restructuring charges, higher aluminium scrap prices, unfavorable product mix, and a net negative tariff impact. But this was partially offset by higher product pricing, lower selling and general and administrative costs, favorable metal price lag, and forex gains. Now, capex as well, stood at somewhere around $386 million. Now, that was also on account of its, Bay Minute plant as well. But brokerages have kept their faith. CLSA has an outperform rating on Hindalco. Target price is at 850 or thereabouts. And but it does feel that profitability is expected to remain low over the next 2 quarters before recovering in the fourth quarter. You also have Nuvama that has a buy call on Hindalco, and target price is at 776 rupees, and they are expecting earnings to in fact have bottomed out in the first quarter of FY26. Hindalco, looking at the charts, I think it's at 670 or thereabouts. Would you expect the stock to look at levels of 700 anytime soon? What are your thoughts on where the stock is headed?
So last 1.5 month, the stock has seen a broad consolidation range of 650 to 700, and still there are no signs of any trended up moves. But yes, I think if one is looking more from a mid-term perspective, one can take a view for next maybe 2 or 3 quarters, then no, this correction of should be used as a good buying opportunity. So on the lower side, 650 is a very strong support where the 200-day exponential moving average support is placed. So keeping a stop loss below that level, one can look for forming fresh long positions over here. But as I said, this is not the stock where you should expect any no sharp moves immediately no in the near term. But if we can keep the stock from next 2 to 3 quarters perspective, then certainly this is a stock where buying dips should be done.
Okay. Buying on dips, that's the strategy on Hindalco. Let's focus in on an ONGC as well. Numbers are expected to come out. The stock hasn't really shown any kind of fireworks. It's down 4% on a monthly basis. Even the 6-month returns have been negative. YTD performance has also not really been enthusing, so to say. The stock is somewhere around 234 or thereabouts, not very far from its 52-week low. In terms of numbers, profits are expected to fall quarter on quarter on the back of lower crude realization, softer sales volume as well, and revenues could also see double-digit drop of 10% or thereabouts. EBITDA expected to remain flat, and net crude realization is seen at $66.1 per barrel, vis-a-vis $73 per barrel on a quarter-on-quarter basis. However, domestic APM gas realizations are expected to improve to $6.6 per MMBTU. But the stock hasn't given too much by way of returns. How should you approach this particular stock from the oil and gas upstream companies, so to say? Would you veer towards something like a GAIL or a Reliance Industries vis-a-vis an ONGC?
Broadly, we have seen a significant relative underperformance in ONGC. Even if you compare the stocks within the oil and gas space, the markets have recovered recently from the March or April lows. There has not been any significant participation from ONGC. So in that terms, it has been a relative underperformer. So there is no trended signs of any kind of trended up moves coming in the stocks. So at least from a trading perspective, until we see any kind of follow-up moves coming in going ahead, I think one can still keep a wait and watch approach. Within the oil and gas upstream companies, if you see, then definitely Reliance Industries overall structure seems to be stronger. Where on the weekly charts we have seen a high top, high bottom structure. Recently, some correction has been there. in Reliance Industries along with the market, but no, that does not change the broader trend. So would prefer no taking long positions in Reliance Industries in this correction and wait for some signs of turnaround in ONGC.
Okay, that's the view. We just want to give a disclaimer. Network 18 is a Reliance Industries Group company, and we are not, of course, you should recommend or you should consult with your financial advisor before taking any positions. But let's move on to a Bata India as well. The stock is down almost 2%. Look at the long term charts, medium term, short term charts, even the YTD charts, 1 year charts, you'll see there's been no spring in the steps. The stock has given negative returns. Even the numbers, have lacked any kind of excitement. Profits were down 70%, revenue down 0.3%, EBITDA, however, was up 7%, and margins have also come in higher, 21.1% vis-a-vis 19.5% on a year-on-year basis. But given the fact that the stock has been in a downtrend, how would you approach this?
So I think it's better to avoid any kind of bottom fishing where the trend is down, where the markets are going up, but still any such stocks are not performing. And definitely, if you look at the volumes also on any kind of in between pullback moves that we have seen, there is no volume based buying happening in the stock. So I think many better opportunities could be seen along whenever the market goes up compared to Bata India as of now. So until we see any bottoming signs happening, I think one can just tend to avoid any kind of bottom fishing here.
Avoid bottom fishing on a Bata, that's the view. Stock has been in an extended downtrend. But one stock that's in high spirits is Tilak Nagar Industries. The stock is up 7%. It has given massive 49% returns in the last 1 month, and over the last 6 months, it has doubled. So yes, profits are have doubled to 88.5 crores vis-a-vis 40 crores on a year-on-year basis. Revenues are up 31%. Margins also higher, 23.1% vis-a-vis 16% on a year-on-year basis. Remember, the company has also been in the news for its latest acquisition, the Imperial Blue Whisky Business Division from Pernod Ricard for 4,150 crore rupees. Of course, it does mark a strategic move for Tilak Nagar to enter the whisky market and expand its presence in the Indian alcoholic beverage market. But, would you say cheers, Tilak Nagar Industries? The stock is like on a tear.
Yes, the overall trend remains very strong for the stock. The correction that the stock saw along with the markets from December to March. So clearly at low levels, a good buying interest was seen, and the stock has resumed its broader uptrend. Now, even from a short-term perspective, the stock is not reaching even its 20-day support, which is around 460 now. So till the stock is intact above 460, one can even initiate fresh long positions with stop loss below that 460 levels.
Okay, that's the view. Tilak Nagar Industries, perhaps you can chase momentum here. But one stock, before I come to queries, want to get in your thoughts on a Praj Industries, clearly reacting to poor set of numbers. Profits were down 94%, revenues also down 9%. Margins have been very poor, sub 5% vis-a-vis 13.2% on a year-on-year basis. The stock has taken a hit. It's down almost 8%. Stock is down 16% now on a monthly basis. 30% almost shaved off in the last 6 months. What are the next support levels to watch out for? It has come very close to its 52-week lows. In fact, it did hit its 52-week low today itself, 406.4. How should you approach this? Should you avoid this stock now?
Yes, I think no, definitely it's a continuation of the downtrend. We have seen when the mid cap and the small cap space had done well recently. Post April to June in the 3 months, we have not seen any kind of participation coming in from stocks such as Praj Industries. So when the broader markets are railing, if a stock is not participating, then that was definitely not good sign. And what we have seen now that it's just a continuation of the downtrend as the stock has hit its 52-week low. So on the lower side, next major support for the stock is seen somewhere around 360, 370 kind of range. So we could see further down move from current levels in the stock.
Okay, that's the view on Praj Industries. Expect further downside on the stock, but let's shift focus to our viewer queries then. Want to take up a query on Zomato Eternal, so to say. This one's coming in from Naveen. The stock is still near its 52-week highs. Today it has taken some bit of a breather, but would you advise looking at the stock at these levels?
Yes, I think if you look at the certain this new age technology stocks such as Eternal is there, Paytm is there. We have seen that in last 1 month when the markets have corrected, these stocks have not seen any kind of no selling pressure supported by high volumes, or neither they have breached there any no near-term supports. So even Eternal, we have seen that whenever there are dips coming in, there is a good strong buying interest in the stock. So I think price-wise downside seems to be very limited in this stock. Whatever corrections that we are seeing comes is more in the form of a time-wise correction, and whatever dips comes, there is a good buying interest at lower levels. So one can definitely hold the existing long positions, and in corrections, one can even look to add stocks such as Eternal and Paytm for their portfolio.
Hmm. Okay, that's the view on Eternal. But let's shift focus to our next query then, coming in from Mukul Vaidya. It's on IEX. This stock has been in news, especially on the market coupling news. The stock did take a hit last 1 month. It has shaved off 34%, but it did see some buying interest in the last 5 sessions or thereabouts. Today it's under pressure, a little bit of under pressure. Do you see the dip as a good buying opportunity?
No, I think no, the broader it has been an underperformer, and the trend seems to be negative. So one can tend to avoid any kind of bottom pushing over here. And the way the stock has corrected over recently, I think there would be many investors or traders who are stuck at high levels would want to exit the stock on pullback moves. So this would limit the price wise upside, where selling pressure would be there on pullback moves. So I think considering the recent underperformance, there could be some pullback move because of oversold setups. But until we see any kind of trend reversal signs or buying happening with volumes, it's better to avoid the stock.
Hmm. Okay, better to avoid the stock. Hope that answers your query. There's a query on railway stocks as well. This one's coming from Srinivasan. Wants to know your thoughts on any of the railway stocks that may be catching your attention. Today, we have Titagar Rail that's, picking up pace. But of course, railway stocks have seen a fair bit of correction. How would you approach some of these names now?
Well, the theme is not in momentum, frankly. No, we have seen that in between price up moves are there, but no, we are not seeing any kind of rally on a sustainable basis in the railway names as of now. So I think there could be some pullback move in stocks such as Titagar towards 850, 860 kind of range. But if you are expecting any sharp, significant up moves or any kind of big returns in the short term, then that seems to be unlikely.
Hmm. Okay, that's the view. The sector, of course, is not in momentum at the current juncture. Hope that answers your query. Couple of queries to go then. Want to take up a query on AU Small Finance Bank. Debu K wants to know your thoughts. How is this particular counter stacked up? You mentioned that other PSU banks are doing extremely well, the likes of Indian Bank, etc. But would you look at an AU Small at all?
More from a delivery perspective, not from a trading perspective. I think if one is looking to buy the stock to keep it in the portfolio for next few months, then certainly I think AU Small Finance can be bought in this recent correction. The stock has corrected from the highs of 840 to 740 now. So downside does not seem there would be major price-wise downside from current levels, since the broader trend, the longer-term trend still remains positive. But yes, from a very short-term trading perspective, as just mentioned at the start of the show, no, it would be the momentum seems to be more in the PSU banking space rather than these private banks. So if one is looking from a trading perspective, then one can avoid. But for delivery, one can look to buy a small finance.
Okay, that's the view on AU Small. I hope that answers your query. Last query for the day then. This one's coming in on a Sun Pharma from Bharat. Hasn't really sent a pointed query, but pharma stocks have seen uneven moves, right? There is a tariff overhang as well, although nothing concrete yet. But we've seen an overhang on some of these pharma names, and particularly for Sun Pharma hasn't really done much. If you look at the last 5 days chart. So any thoughts? Anything that's catching your fancy when it comes to pharma?
So it does not seem to be in momentum. We have seen that the entire pharma space, because of this uncertainty over tariffs, we have not seen any kind of buying interest coming in these stocks. So I think no, markets does not like uncertainty. Until there is certainty on what kind of tariff would be levied on the pharma names, I think the relatively a bit of relative underperformance could continue in the short term. Within the entire pharma basket, Torrent Pharma is one stock which technically structured seems quite positive. Have recently seen a breakout above that 3450 resistance in the stock, and overall, when the stock is going up, the volumes are good. But during corrections, we are not seeing any kind of volume-based selling happening over there. So pharma as a space, I would say one can wait for this clarity to come out, and once the uncertainty is over, irrespective of the tariffs, I think then we would see some renewed buying interest in the stock. And if I have to pick down any stock within the pharma names, then Torrent Pharma could see relative outperformance compared to the other names.
Okay, that's the view. Torrent Pharma could see relative outperformance within the pharma pack. That wraps up our query segment. But before I let you go, Ruchit, any recommendations for our viewers?
So I think no Paytm would be one recommendation that no I would like to make over here. So overall, I think the stock has formed a bullish flag pattern technically on the daily chart, which is a trend continuation pattern in last 1 month when the markets have corrected. We have not seen the stock going below its 20-day exponential moving average support. And technically, if I look at some positional chart structures, then it seems that the stock could see a significant run up from current levels as well. So today the stock is down by 1%. So one should take this as a buying opportunity. The 20-day MA is around 1050. So 1050 can be kept as a stop loss at lower levels, and on the higher side, one can expect levels around 1180 in the short to medium term.
Okay, that's the view. Those are the recommendations. But Ruchit, just want to get in your thoughts on Medi Assist also. I know it's a recent listing, but looking at the chart patterns, any thoughts there? Because there's been a block deal in the counter today. Over 15% equity worth 578 crore rupees have exchanged hands via a block deal. The stock is up somewhere around 6% or thereabouts. Sources are suggesting that promoter entity Bessemer India has likely sold somewhere around 4% via the block deal. Offer size was at 560 crore rupees or thereabouts, and of course, floor price was at a discount of 4% to yesterday's close. But whatever little data you have on Medi Assist, would you take a call as to which way the stock is headed? What are the levels to watch out for in the immediate future?
So technically, 520 is a support for the stock. Until that is intact, I think the short-term trend is not looking negative because we have seen recently from the lows, the stock has formed a high top, high bottom structure, and last higher bottom was around 520. So one can hold the existing long positions if any, we're keeping a stop loss below 520.
Okay, 520, that will be a support level for Medi Assist. But with that, Ruchit, would like to thank you for taking out time and joining in as always. And I look forward to our next conversation as well. Have a great day and a great truncated week and a very happy long weekend as well that's coming up.
Thank you, Nandita. Wish you the same.
Thank you. Well, on that note, let's take a look at the market. Not bad because we have come off the opening lows when it comes to the headline indices. The Nifty is up somewhere around 50 points or thereabouts, 0.2% kind of gain, and the Sensex as well up somewhere around 140 points or thereabouts. Although the mid cap index is underperforming the benchmarks. Yesterday also there was relative underperformance when it comes to the mid cap index. The breadth, however, remains solid. 2:1, the 1647 advances to 776 declines rather on the NSE. So yes, not looking all that bad. Perhaps we could see an extension of the rally that we saw in the market yesterday. But let's bring on board our next guest for today. Then joining me, Sandeep Bagla, CEO of Trust Mutual Fund. Sandeep, lovely chatting with you this Tuesday morning. There's been a lot of noise, right? 50% tariff. Tariff tantrums, this, that, but, let's focus in on the good news for a bit. Equity inflows came in at record levels yesterday, with, equity inflows topping 42,000 crore rupees despite the recent weakness in the market. That is a sign that, investors have, kind of matured, instead of going for redemption, they have, looked at this volatility or weakness as an opportunity. Do you expect this trend to sustain?
Hi, good morning. Thank you for having me on the show. Yes, I do expect this trend to continue, especially on the SIP side, because SIP is something which is very unique to our industry. It is the true retailization of the financial services and investments. And we are getting money from all corners of India in small lots, which are likely to be sustainable over a long period of time. And as the penetration and information about mutual funds reaches more investors, I expect this trend to continue on the SIP part. On the other part, which is perhaps the bulky part, it has been dependent more on the number of NFOs during the month. So that could be a little sporadic. So I am a little more confident about the sustenance of the SIP part for years to come, not only the immediate future, but I think this trend is only likely to continue and gather pace over the next few years.
Sure. Mid and small cap funds saw stronger inflows, right, compared to large caps. Do you think that is justified given the current valuations, or do you think there is a risk of overheating in the broader market as well?
No, no, there is a risk of overheating in the markets because, we are expecting that earnings from mid and small caps to be higher than those of large caps over the next couple of years. And we have seen that markets can be fairly brutal in terms of any disappointments. And at the same time, the stocks which are doing well in terms of earnings, there is positive surprise in the stock prices also. So really, it has become a very, very bottom-up stock pickers market, and within the same industry, different stocks can perform quite differently in a short span of time. So I think it is a good market in the sense that mid and small caps are likely to outperform the large caps over a longer period of time in terms of earnings and prospects. But in the short term, there are so many uncertainties building up that it's probably a good time to invest with a longer term investment horizon.
Sure. In terms of flows, thematic funds have made a very strong comeback, right, with stellar inflows. So, where exactly is the smart money heading right now, and which themes, according to you, are drawing the most investor interest?
The thematic funds are, popular with investors because they give them concentrated bets on specific themes and sectors. But my opinion for long has been that one should stay put in more diversified funds where the fund manager has greater discretion in deciding which sectors to allocate funds to. But now SEBI has categorized the funds and it prohibits mutual funds companies to launch schemes in a particular category if they already have an existing fund. So some of these themes are, more marketing oriented. So I would really, I'm more bullish the on the idea that one should stay in a diversified fund. However, some of the themes that we like are, power generation or hospitality, and these themes are good. But at the same time, I would say that one should stick to the diversified funds.
Stick to diversified funds. Uh, would you look at multi-asset fund, hybrid fund? I mean, how should one really strategize right now?
I think both these categories that you mentioned, hybrid funds and multi-asset funds, are good diversification away from pure equity exposure because there's a heightened amount of uncertainty. And many investors do not have the appetite to see deep drawdowns in their portfolios. I'm not suggesting that there is going to be a deep drawdown, but the possibility is there because valuations are somewhat stretched, and there is lack of clarity in terms of economic growth and earnings. And stagflation is something which economies or the regulators or the policymakers are not particularly adept at reacting to or navigating efficiently through. And it seems to be that there's some amount of weightage that can be given to a scenario which is somewhat stagflationary, where the growth seems to sputter a bit for a few quarters. given the uncertainties on policy front and the trade wars and also geopolitical risks. And at the same time, while optically inflation numbers might be lower in terms of headline, but the core inflation remains high. And only because of food inflation, the inflation numbers look good. And there could be inflationary pressures, a few quarters down the line, which could lead to a situation which is slightly stagflationary, and that could lead to some amount of, drawdown. So I would say that, investors need to be a little careful right now.
Sure, need to be a little careful. I was just comparing India's performance with the other global markets, and barring the US, most global markets, have significantly underperformed India. So, would you see attractive opportunities in these undervalued regions, and how should investors really look at them? Because currently there is a $7 billion cap on overseas investments, and this limit has been fully utilized as well.
No, see, I think that markets tend to reward companies or sectors or even countries or economies which are high growth. And when valuations are slightly elevated, we are not really looking at value investing, and investors are looking at high delivery of growth in earnings and in terms of sales. So, which is why probably the US market, especially the technology part, which has experienced extremely high growth, and India, which has been experiencing high growth probably because of its democratic structure, resilience, and the diversified nature of the economy and fairly good practices and policies, which is why I think India has been outperforming. I don't see any reason why one should go and look beyond the growth. And we tend to be a more growth
Hmm.
focused. So I think this is time to stay invested in growth companies and growth economies. Some diversification
Hmm.
is desirable in terms of asset allocation and in terms of style diversification as well. But I think markets,
Hmm.
if growth were to crystallize, and that's a big if, then I think the growth investors are likely to do well. And India seems to be in a very sweet spot, especially if one takes a longer term view on its demographic dividend and on its diversified
Hmm.
growth.
Hmm. You know, we talk about growth. Of course, there is still a lot of uncertainty with regards to tariffs, and if at all, I don't know. I mean, market participants are pretty much convinced that we will not be having to looking at a 50% tariff, and that's just a negotiating tactic by Trump. But anything above 20%, of course, would that be a big hit to growth? Because RBI has, kept its growth forecast intact at 6.5%. And given the commentary, wanted to understand: do you think that we've pretty much seen the end of the rate cut cycle, or would you say that post a Fed rate cut, RBI will go ahead and cut one more time?
Yeah, I think RBI is playing it very prudently. It is very
Hmm.
there are many moving parts right now. And if I were to give you the chess analogy, in game of chess, you have the opening gambit or the opening game, then there's a middle game, and then there's the end game. I think we are, in terms of trade wars, this is the opening gambit which Trump is using. So where it will settle down in terms of eventual trade and tariffs, it is uncertain. And what impact it will have on growth and inflation is fairly speculative right now. So I think RBI has done well to stay away from its research, whatever its research has shown, and not be very speculative about growth. But I don't think RBI is going to cut right now because our RBI, our Reserve Bank, is fairly focused on inflation and gives some priority to inflation. And inflation is looking to go up in the first quarter of the next calendar and financial years. So I think RBI will stay put unless we see, dramatic fall in growth. I don't think we will have any more rate cuts immediately. So that is I think
Okay.
RBI will stay put on the rates right
Sure.
now, as of now.
Okay. So for now, it looks like we have entered a period of prolonged pause by the RBI until there is a dramatic fall in growth. But tell us, post the earning season, we are just in the last leg of the earning season. Where are you seeing opportunity now? Where there is a lot of scope for upgrades going forward. Going forward.
Yeah, I think there are pockets which are doing well. I think the hospitality, which includes hospitals and hotels, tend to be doing quite well. And I think the numbers also are supportive in pockets. Also, the entire shift from thermal power to renewable energy, it leads to some amount of upgrades in the power infrastructure, the grid system, and there are pockets of opportunities there where the visibility of high growth is there for the next few years. And there are very few sectors which are, showing secular growth because of sector-specific reasons and are probably not so impacted by the global trade wars or geopolitical situations. So I think domestic focus has greater clarity, and I think those opportunities are still there from an investment perspective.
Okay, point taken. Within the capital marketplace, what's looking more exciting now? Would you look at AMCs given the stellar fund flows, or would you stick to exchange stocks and even depositories, so to say? We've had a good listing by NSDL recently.
Yeah, I think the whole capital market infrastructure plays fantastic, and it's likely to remain buoyant on back of the mega trend of savings converting into investments. However, valuations in the short term can lead to volatility in stock prices. I think AMCs are an evergreen, sector to invest in. They have infinite ROE because the capital requirement beyond a point is hardly there, and they are cash generating and ever expanding in the current situation. We were stuck at 40 to 45 number of AMCs for the last 20 years, as long as my memory goes. And now we are anticipating that there will be at least 20 more AMCs, which are going to be added in the next 1 year. So maybe the number will go to as high as 60 to 65. So I think this is also pointing towards the bright prospects of the industry, and in terms of more and more retailization of investments and more participations from the retail investors. So I think this is definitely, while the industry can say that they have almost 30 years old, but I think there's good times ahead for the AMC industry definitely. And some of the other infrastructure
Okay.
providers will gain, but the growth of the AMC industry is likely to be the brightest.
Okay, a lot of potential in the AMC companies. But last question, really, in terms of a balanced portfolio, what should be the correct approach now? And if perhaps somebody is looking to invest somewhere around 10 lakhs, how would you really break it up?
So I would say 40% should go to equities. In that 40, half should go into large caps for stability, compared relative stability in the equity portfolio. The other half should go into mid and small caps, again, diversified funds. The 60 rupees, I think 10 to 20 rupees should go into gold, because in case we have inflation in the future, I think it's a fantastic hedge. And while the prices have gone up, it should be looked more as a portfolio stabilizer. And 20% or 40% balance, 40% should go into fixed income kind of funds. Probably part could be invested in slightly lower credit, high yield, selective bonds also, which should give you a good combination of current yield as well as liquidity, as well as potential growth. So I think this is time to go slightly more balanced in terms of your asset allocation, because there are so many moving parts that one doesn't know which way, how the assets will perform going forward.
Okay, that's how a balanced portfolio really should look like. With that, Sandeep, would like to thank you as always for taking out time and joining in. Always enjoy these conversations, and I look forward to more in the future as well.
Thank you, Nandita. Thank you so much.
Thanks a lot. Well, take a look at the market. We are at the high point of the day, above that 24,650 mark. So yes, we are trying to build on yesterday's gains, and in 24,666, that was the swing high for today. But let's see whether we can clear that 24,700 mark on the upside as well. But of course, time will tell. But for now, nothing really to complain about. Only the fact that the mid cap end of the market, is underperforming the headline indices, but still the mid cap index has also managed to edge back into the green, and the breadth, as I had mentioned, is looking extremely strong, 2:1. 1680 advances to 828 declines, so nothing to complain about there as well. Bank Nifty, however, it has come off the opening lows, but it's trading with a negative bias. And if you look at the list of gainers, that's much longer compared to the list of losers, so that's another good reason to cheer as well. Hero Motocorp, Wipro, Titan, Tata Steel, TCS, so some of these Tata Group companies doing well. M&M does well today as well, and some of these IT names are doing well, the likes of Tech Mahindra, HCL Tech, etc. Reliance as well among the gainers. Geo Financial, that's also gaining, and of course good traction in the market. Let's hope. Now we are at 24,675, almost a 90% uptick on the index. Building on those gains, bulls are back now with a vengeance. Let's hope they continue to trounce the bears as we move through the session. But we'll see you back at 3:30 p.m. with closing bell. Don't forget to tune in for that, and have a great trading day. Thank you for tuning in. Have a lovely day. Thank you.